Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 28th of December, 2020, and right now we're about 6:15 p.m. Central Time. First thing, I've decided to go away for a few days. Not very long, but I'm going to leave this coming Wednesday. Won't return until next Thursday. So while I'm gone, you don't have me to kick around anymore. I will be back, though, in Chicago on Thursday. That is the plan. And start recording again Friday. Through the weekend, you'll get your weekend updates from me back onto the YouTube channel. And also, do me a favor. Subscribe to this channel. It's free on YouTube. You know, it helps me keep it going. The more viewers we get, the easier it is. We get a number of paid subscribers out of that for my research. And for those of you that do get my paid research, I am taking my computer with me. You know me. I will not leave you behind. So I intend on recording my paid subscriber videos because I do those off camera, and those are easier for me to do. So let's talk about the event, because the only thing that matters is what's really going on with the president changing gears over the weekend, Brexit being signed off, and today the House voting for the passage of $2,000 payment. Now it goes to the Senate. So where are we on all this? Well, the market's telling you where you're at. The stock market's up. It likes this. We saw, I think it was over 40 Republicans join in on the Democratic side for the vote in the House. Now we have to wonder what's going to happen there. The majority's very slim, as you know, in the Senate to get this staying with a nay vote. I don't know if there'll be any Democrats that cross over to nay. It'll take very few votes to vote yay to override the current bill and give $2,000 to the people. What a Christmas gift that might be for the needy. And that's the way you have to look at it, the needy. It's not about, in my mind, politics. It's about people that need the money for no event other than the COVID, which isn't their fault. Are there people that take advantage of it? Come on. Are there people jumping in line already to get the vaccine that shouldn't? Come on. You know that, I know that. But when you dig down, especially at this time of the year, you should have something in your heart for the people that need help. I'll let it at that. So let's go to the chart action, because that tells us a lot more. And since this is the financial, we really get a feel. For the week, we're up 53 points. Now remember, we're already into the Tuesday trade. The market's up again, but that's 53 points, up 1.5%, new all-time high. So you naysayers that didn't believe me in November when I said, ho, 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 Santa's coming to town, I'm not always right. I told you, if you saw me, I'm like Swiss cheese, believe me. But I really believe in that Santa Claus rally, and I looked at everything this year. I didn't see anything to derail it, and I still have that feeling. So you're there. Whether it continues on, well, that's a whole different game, but it's done what it had to for the Christmas, and now it's a question what it does going into early January, which often follows through. Not necessarily always, but often. So as I look at the market, new all-time highs, and yeah, these are all-time highs. The trend is up on the swing line, higher lows, higher highs. Remember what the swing line does. The swing line looks back at the bar in front of it, whether it's a 15-minute chart, a 30-minute chart, a daily, a weekly, a yearly, a quarterly, I don't care what it is. It's going to look at that bar, and I have 5 sets of rules that make up the indicator, and away it goes. I've programmed that into all the Linn charts that we use here, which are, we have a Java version and a internet, a web version. So they both have the same study in them. Higher lows, higher highs. Until you take out 3676, the trend is up. If you believe in the definition, as I do, that higher lows and higher highs is the definition of an uptrend. But I like to filter that. So I put on key moving averages. The market's over the 18, the 100, and the 200. I don't think there's any argument there that the market's over all the main moving averages. Good. Bias. I define bias, which is a filter on the swing line, is where the market is in relation to the 18-day moving average of closes on a daily chart. It's over it. So the bias is up, the trend is up. Next, I want to know where are some resistance points. I am the first to tell you in these videos, you don't get all my resistance points. They are in my subscriber videos that are paid subscriber videos, not these. The first resistance is the Bollinger Band. So if we take a look at this market coming into today, the upper Bollinger Band's 37.17. Obviously, it's going to move as the market's moving with it. It moved up to 37.2750. Today's high, 37.32 1/4. Therefore, I believe, right or wrong, that that's where the pros took money off the table. Tonight, the market's up even higher as it's getting that additional information, what the Senate is doing. And you can push it higher, no question about it. I'm not arguing it. But I do think the pros have taken a chunk of money off the table. And if they're riding this market higher, they'll move their stops. I never tell you to buy a Bollinger Band or to sell a Bollinger Band. You will not hear that. The second thing, I look to see is the market overbought, oversold, or embedding. Embedding means that the market is locking in and has gone from overbought in this case to locking in a trend where you start with both numbers that make up the slow stochastic, the red and the blue called a K and a D line, either going sideways over 80 for several days or more. They're not. So you have an overbought market that's at a resistance point and a profit objective has been hit in an uptrend. That does not mean the trend has to end, but you're at an area where the pros, I think, are taking money off the table. Different story here in the NASDAQ. Fully embedded up to the upper Bollinger Band. I think that what the pros would do from there is on pullbacks, they'll continue to buy the market and continue to pump that out against the upper Bollinger Band. Now, there could be a point in time where the market just accelerates away and goes up. That happened back here. But I'd have to go all the way back to show you how the story started, and I don't want to do that today. In the Dow, you've got what we call a pipe. Now that's when you get really narrow in these Bollinger Bands. You're not quite that narrow. You're close to it in the NASDAQ, but not there. Closer to it in the S&P than in the NASDAQ. But this is what I call a pipe. In a pipe, it is not uncommon that you get attempts to break out to the upside, attempts to the downside, and they end up often in failure modes. It's enough to drive traders crazy. And if you're one of my paid subscribers, one of the things I do, and I tell you, get your psychiatrist number. You're going to need them because you're going to go, I don't understand why it just didn't break out and keep going. Why did it not break out to the downside? You've got to learn to recognize a pipe. A pipe is a consolidation number. From there, the market's either building a base to work higher from or a top to drop from. When it breaks out, it breaks out. I wish I could tell you I know. But when you're not embedded, it's hard for it to break out. It can be dragged into embedding. I've seen that a lot of times. But all this market's telling me, you're in a pipe, you've hit a resistance point, the smart money, quote unquote smart, is taking money off the table and jamming stops up if they're going to stay long. In the Russell 2000, this is a market flirting. The word is flirting. Flirting's not the same as succeeding. It's flirting with an idea of trying to lose the embedded reading, not doing it yet. It was an ugly day in this market today. It got up to 230 did not hit the upper Bollinger Band and had an outside day down. That's nerve-wracking. Now, because it closed at the lower part of today, if you're down early on, you got to be very careful here because that'll cause further droppage in that red reading and you could lose the reading. Well, instead, as it turns out, the market passed that other bill today in the House to increase the payment from $600 to $2,000, and so far the market likes that. You know, the market's fickle, but so far. You get under today's lows, be careful. You're probably going to lose that reading, and that's a warning sign that it might be time to take money off the table. Not against that. The VIX, you got up once over that upper Bollinger Band, and bam, right back into it. A pipe. Right back there. Oversold, hanging at that 18-day average. I just see a market churning away right here. In the T-bond market, momentum's trying to drift to the downside. You have a pattern of lower highs, lower lows. A trap could be laid in this market. You had today a market that closed unchanged. So I wish I could tell you that you had a day where you had an outside day, which you had with an upside or a downside. You didn't. So even if you take out 172.3 and you think that there's Ira's rule, we have an outside day, we're going up, that's the trap. No, you need a settlement that isn't flat, unchanged. I don't have that rule at work. I have a downtrend that if you take out the high back here, I'm concerned. Here it doesn't mean anything. The bears still, in my opinion, have control of this part of the curve yield. When you come to the 10-year notes, that's not the case. You have a lower low, a higher high, and you're just hanging at that 18-day average. No trend at work there. And in the dollar index, you're in a downtrend with lower highs. Today's low took out that low. So prior to this, you were trying to get a pattern that had higher lows, lower highs. You broke down under 89.95 by getting to 89, 89.5, but couldn't stay there. Then you came back. Today's high was 90.32. 90.31 was the high on Wednesday. So you have an outside day up. That puts the swing line, actually, you can argue that it should be pointing to the upside. That's what I'd be doing now, probably. And what happens if you take out today's low, either on Tuesday or Wednesday? That's what I call a bull trap, and then I'm looking for the market to drop at least to the lower Bollinger Band. It's not very far away, so it's not like, oh, look at it's offering something big. Resistance on the rally, I'm expecting at the 18-day average of closes. In the eurocurrency, the market still has an uptrend, or does it? It's got a stall trend. Do you disagree? Lower highs, higher lows, you're in a stall. Okay, just recognize that. The overall legacy of the swing line is still one of the higher lows, but you've lost the higher highs. I don't like that. Just sidelined. You get the British pound, you get Brexit, and the pound falls. C'est la vie. Buy the rumor, sell the fact, or is it all just churning itself right here? That's what I think you have actually going on. A big churn in the market that I'd be ultra careful of doing anything with. In Bitcoin, a dramatic move to the upside. Now, you got over the Bollinger Band. The odds of staying over that number, 5% of the time. You want to do it? Fine. This is where the pros come in and they go, okay, I'll let you have that 5% because it's going to slip back on you and I'll figure out what I want to do. Are some of the boys writing against it, different strategies? Probably. When that happens, wouldn't surprise me. Crude oil. Breakout to the upside in Brent versus WTI. We saw that Mr. Nowak of Russia, who's now, I believe, the prime minister, he was the energy minister, he today very nicely said he believes that OPEC Plus will increase production in February of this year. Well, they've been pushing for increases all the way through, so I don't know that that means anything. We will see how the COVID vaccine works, but if it works, yeah, I think OPEC's going to try. And here's what else I think. I think it's amazing that oil prices have stayed up this strong. That's the good thing, because with all this terrible pandemic news and the new strain and Japan shutting itself now, if you want to go to Japan and you're not a Japanese citizen, you can't get in the country. Not going to happen. So, big problem. So they've just shut down their borders. You're going to see other places. Our hospitals are filling. What's going to happen with people going away over the holiday? Many are going to bring disease and spread it. You know it. I know it. It happened over Thanksgiving. If you don't think that mutant is part of it's here, I think you're living in a bubble, a shell, if you will. It's here. We just have to discover where it's going to be, because it's just about everywhere else, and people do travel all over. WTI crude, lower low, higher high, no trend, working off an overbought condition. You have in the heating oil higher highs, higher lows, but you lost an embedded reading. Always be careful of that. It means that as much as you try the upside, there's a problem with the market, and it keeps giving up those gains when that happens. Let it work out of being overbought, in my opinion. And last, the natural gas. What a mild winter this is. And over the holiday, you finished in trouble, but man, what a gap you had here. You were down sharply today. If you take a look, by the end of the day, you were down 7.5% almost. That's a heck of a decline, and all it's trying to do is get back in the Bollinger Bands. It hasn't tried to fill that gap just yet. Want to remind you that, as I said, for my subscribers, you'll discover I really put out a lot of information, and often right through vacations and holidays, I try to keep my people up. Why? Because they're paying me. They're making me my livelihood, and if I'm going away, that doesn't mean I shouldn't do something. Now, am I entitled to a vacation? We all are. All of you take them, me too. That doesn't mean I'm going to put in all the hours that I normally do, but if I see something, you're going to get it. Do I put out the videos? Typically I do. First of all, I like to wake up early, so for me it's a perfect time to do it. And late in the day, where I'm going, it's going to be sunny and beautiful. I'll probably want to be out of the sun. You can watch these videos that I put out for my subscribers either on your cell phones, tablets, computers. I will talk the news of the day typically, maybe not as much when I'm gone now. Now, the way that I cover the markets in this order, there'll be a scroll bar on our website. And when you pull it, it's going to light up interest rates, bold, metal, so you know exactly where you're at as you're pulling it along. Just let go and it plays for you. Why? These videos are 20, 25 minutes long. Some people will watch them 2-3 times. Others just want to get to where they want to go to work with it. The cost? Minor. If you haven't tried it, $7.95 for 30 days. That's 26 videos typically. I have 2 subscriptions. I have my morning video, then the Spider ETF one. I even have combo packages. But you can read about all that by going to our website at www.iraepstein.com under the word research. You can call my staff. They'll have you set up just like this. You can try it. You can quit it. You can buy a 1-year subscription. You decide what you want to do. In the meantime, I am going to see you tomorrow. I am going to say Happy New Year if you don't come in and see that particular show, but you'll have me tomorrow. You have a great day, folks. Take care.